news. Holy shit! What the...
So let me welcome you to our second podcast. I'm expecting the YouTube call any minute with a 300 player button, which will reward it for our first 300 viewers of this format. And Nick and I decided we'll stick with it. So what I'm going to do now is, as it is only the second podcast or video cast or whatever you want to call it, I'll introduce Nick again. Nick is a dear friend of mine. He's 40 years active in the market. Before he retired to manage his own wealth and advise companies, he was 40 years in the industry. Started, like myself, as a humble trader. Traded mostly, Nick, you will correct me if I get that wrong, government bonds, and was active in everything which has yield, interest or no interest attached to it. Credit risks, you know the game. And before he retired, he was managing roughly 88, 98, 85, I don't know, just short of 100 billion euros in assets under management. So he's a person I trust with his decisions. And we just discussed that before we came on air. At one point in the future, we're going to make a full-length introduction video where you can find more about Nick. And also, obviously, I'm on this channel already, but we will introduce that for all our future guests we have in here. And yeah, the first podcast was absolutely a doozy. I liked it. It made a lot of fun, especially after Nick shot me down at the end with my must do better recommendation for a short in NVDA. We even got some comments through the social media. So really, are you sure you want to short NVIDIA? So maybe I fill you in a little bit about, well, my motivation to do that and the process I was doing that. I saw it on LinkedIn, Nick. One of your good friends, former mentees, was one of the ones who said, yeah, well, great podcast, but really, dude, you want to short NVIDIA? So to fill this in, I'll catch a little bit further why I wanted to do that. And one of my main points is I call it the barista effect. You know, I've done far more worse jobs than being a barista in my time, so I don't want to have any disrespect here. But if I hear one more barista in a conversation explaining to me the logic chain, why it is a stupid idea to short NVIDIA, because NVIDIA is producing chips which are filtered into the AI network, which is the next big thing. And I must be a raging idiot to short this logic chain. It is a point I listen to at one specific point in time, but I haven't found anybody in the typical crowd to actually tell me, oh yeah, it's a good idea what you're doing, Thorsten. Nick, back me up here. When you hear nobody agreeing with you, what does that usually tell you?
Well, that tells you to think again.
I knew you would say that. So I had this experience the last time I had it. Obviously, over my career, it happened several times. A really nice guy. You know the restaurant around the corner where I'm at least twice a week. Nice Italian restaurant. They had an Italian young lad, strapping young lad, really good salesman, swagger, everything. And he retired to become a crypto trader. Guess at which level he did that? And he asked me, Senor Thorsten, can you explain to me what is it with all these crypto and Bitcoin and Swagger Talk and you name it? And I'm going to, yeah, wait, that is nice, but I'm not making a lot of money. So then he retired, and I don't know what became out of him, but obviously I don't have to tell you at which level he decided to become a crypto trader. I don't want to take the direct comparison between NVIDIA and crypto, but even the argument for NVIDIA then was already crypto, because people were buying all sorts of video cards because they wanted to mine crypto like crazy. Which is an interesting phenomenon for me, because now with energy prices, is it actually still worth, you know, far more about that than I do. Is it actually still worth mining crypto, Nick?
Yes, it is.
Yeah. So what energy costs do you need to?
Oh, that's far too deep a question. The price is still high enough for the miners to make money.
All right,
So it's not all mining, yeah. So there is a much bigger story there to discuss. But let's stay on track with NVIDIA.
I was about to say we filter into that a little bit later. So obviously, then my process is also slightly different than Nick's process. Nick is a portfolio manager, yeah, with a different process than I am as a humble trader. The name of the channel is the tactical brief, not the strategic brief. Yeah, so I look for shorter term opportunities, and even though I tell all my former trainees, my students, everybody who wants to listen to me, never try to buy the low or sell the high. From a certain age on, that's pretty much all you're trying to do because you think you're smart and you have seen a lot. And this is one of the points. How do I usually start? Obviously, I've heard the logic chain from people a lot. Why NVIDIA is a sure thing and you shouldn't short it. Okay, spoke about that. Second point, what I always do, there's a tiny little website called Simply Wall Street, which I met through Nick, actually. You were using it, where you get like an accumulator of information, what the market professionals, the banks think about certain things. And it also has a little section about what the insiders, corporate insiders are doing with the stock. They thought selling the shit out of NVIDIA at 230 was already a good idea. If you go into the board members, after the last earnings came out and NVIDIA gapped up, you saw some of the board members actually selling chunks of it, and you don't see any buys into NVIDIA at this level. And they see things different than Mr. Market. Yeah? If you're an insider, you make the calculation, how much value, how much productivity can I gain in the company, and is the valuation somehow correct? They don't consider, mostly in their decisions, what Mr. Market, who tends to exaggerate to the upside and to the downside, put into this scenario. That's one point. Obviously, I didn't short at this point in time already because I thought with my market maker hat on, yeah, there's still a little bit to run to the upside. Then we creep closer and closer to this level now, which we are talking about, roughly about 300. And then I heard the next sentence, ooh, yeah, the retailers and everybody is going to squeeze the market makers. Yeah, we will set them gamma short and it will explode to the upside. So now I'm a market maker, right? And the last time I heard this discussed in epic length was about GameStop, Bed Bath and Beyond. And with GameStop actually was the most interesting factor. The SEC published you can actually find that on the internet. It's only 12 pages long, a little paper, and said, okay, let's investigate what actually happened there when the short squeeze in GameStop happened. Because the, talk of the town was that all the market makers were screwed. Yes, they were at the beginning. And then market makers like myself covered their losses, yeah, put the tail between their legs, turned around and said, okay, let's not do that again and start smart. And we weren't wiped out in these scenarios. We lost a little bit of money, yes, but that's part of the nature. Then the market moved further up and further up and further up in GameStop. And the SEC investigated it. And the interesting outcome was actually, yes, all the retailers were playing with themselves. They thought there is the elusive market maker and the elusive hedge fund manager who's being squeezed out of the stock still in the market and is buying it up just to desperately get out of their short positions. No, they have already lost. They've already left the market. They took their losses at an early stage, and then they were just observers, like, well, most of the professional crowd, while the retailers and the Reddit crowd were playing with themselves and were believing in something that wasn't actually there. So if somebody tells me now at a level of 285 or 290 or 295 that there is the danger that the market makers will rip the stock to new elevated levels, I find that very, very unlikely. Because if I was screwed earlier. I'm not in this game now anymore. So these were my 3 points. And now we come to the process. What makes it for me different to get into the market? What I do is I sell upside, and that is actually not a new strategy. Let me refer back. That was actually the after show Nick and I discussed last week, which wasn't on tape already. You all have heard of Jesse Livermore, yeah? The legend of traders out there, speculators in the market. And his book is Reminiscence of a Stock Operator. Everybody of you should read it if you haven't done it. I'm pretty sure 80-95% of you have already had a look at it. And there was one thing, even as a young trader, I remembered that. Jesse Livermore wanted to go short cotton, I think it was. Told his assistant, okay, we're going short cotton. go into the market and buy 1,000 or 10,000 bushels of cotton. And his assistant looked at him and said, what do you mean buy? We want to be short. I said, yeah, we want to be short. Just do it now, do it fast, and come back to me and I explain to you what happened. So his assistant went out, bought the bushels of cotton, came back, and Jesse asked him, so how were the executions? They said, yeah, fantastic. If you want to go long now, we got it straight away. Then Jesse looked at him and said, okay, and now sell 10 times the amount we just bought. And his assistants again looked at him and said, why are you doing that? He said, for me, it was important to find out how fast would I get a decent sized order into the market? How fast would I be supplied with this material? Obviously, there was no problem whatsoever. I immediately got filled when I came in with a decent chunk of, give me that. So I'm now ready that I think the market is already filled up and material comes out. And obviously now, being a private investor, a retailer, I can't do that anymore. Yeah? When you work for a bank, you have more ammunition, you can actually play the game. I can't do that anymore. What I can do is I can observe the market. And when you look at the volume spikes that happen at these levels at around 280, big orders came in and they were immediately filled. Okay, that's still not a guarantee that my trade will work out. With a time horizon of, let's say, 3 months, this is the things I'm looking for at the moment at certain levels where I want to sell. I'll come to that in a second. So what do I do? On Monday, after I got the feedback, are you an idiot? Do you want to sell this fantastic stock? I said, well, I did it anyway. And I went in and the market was trading at 291 or something like that. Yeah. So I sold a 290 call, got a juicy premium for that. And because I'm not an idiot, I bought a 295 call 3 months into the future to cover my losses. So what happened? The chance at 290 was 50-50. Yeah? So you assume for a 50-50 bet, you get 50 if it works out, and you lose 50 when it doesn't work out. That's exactly what I generated as a premium. So to the upside, I'm covered, and I did it with a relative small portion of the portfolio size I actually want to build up in this trade when I get more confirmation in. So let's assume worst case scenario. Market spikes up. Market makers are idiots nowadays. They're being squeezed out of their shorts and the market ends up at 330. Then I do a new fundamental reassessment. Yeah, has actually Netflix developed an AI which has developed a new chip? Not Netflix, NVDA developed a new AI that developed a new chip for NVIDIA which nobody can copy. And well, if the facts change, I change my opinion, but I don't see that. So it gives me another level. I've had a certain loss to this point, but then I can reassess. And if I'm still of the opinion, if you love selling it at 300, you love selling it at 330. Oh, first point. So if I'm right with my assumption, what happens next? The market will decline or stay at this level or below this level. So this sold call will generate income for me. It gets worth less. And because I bought one higher up, which was worth less, that will lose value as well. On net basis, I will make money. Not a lot, but I will make money. This will give me the Jesse Livermore indication. Okay, something was obviously not quite too bullish in this scenario. And then I do something which obviously if you are working in options, I take this money I will hopefully generate out of this trade and look at the levels I like. And these were the levels when the individuals, the board members, start selling the crap out of NVIDIA, which came directly after earnings, produced a huge gap. And then I'm a big believer in the bell curve. Now, the bell curve is the distribution. It works for returns as well as for volume. When you gap into the market, there is no fill in this bell curve. And the bell curve always tries to reestablish itself. That's what our gap would be at this point. So let's assume for a moment then we have a correction. And even if it's only technical correction, it might drift back into this gap. Everybody's talking about gaps. You've heard it, but now you heard an explanation why we like the gaps. There is a certain logic behind it, which is based on mathematical assumptions that came in. So that is around 250, this gap. That would be the first part where I think we could aim at that. Let's assume I'm right now. We've already sorted the case out where I lose money when the market gaps to the upside. Just means I'll put the trade on again if I'm still of the opinion I did something wrong. Now I've made some amount of money with a short position I have. This money I take then and don't buy an at-the-money put. Let's assume we are trading at 275 at this level. I go in and say, okay, great. Where do I see the market going over a specific time horizon? To 250. All right. I could then say, if the market is at expiration trading below 255, I want to be right. I don't care how much it trades below that. I just want to make sure that it trades below 255. I use an option strategy again, this time a put spread. Almost, you could call it a digital option. It allows me to place in a speculation that says, as long as you're below 255 or whatever level I choose, you get a payout. If this payout generates for me a 4-to-1, 5-to-1 profit-loss ratio, yeah, then I can take the money I earned out of the short position on the top side, which I've installed, take this money, put it into the very cheap digital option I bought on the downside, and I'm playing with house money. And that is the difference between a portfolio manager and a trader. For me, house money simply means I took a certain risk at the beginning of the trade. When the trade works out, I invest this with a higher leverage to a certain level I'm convinced in, but I can't lose money anymore. And we all know if my risk is 0 and the reward is even 1 cent, my return on equity is already infinite because I divide through 0 at this point. Now, that's not the only position I trade in my life. Yeah, I have a book, or I tend to have a book, where a lot of these weirdo trades are in. And a lot of these weirdo trades have actually the position that I can't lose money on them anymore. I took a risk at the beginning. That risk hopefully worked out. I take this house money and invest it into trades which give me a high payout ratio. So let's assume we are still working with a 5-to-1 ratios. I can afford 4 suckers in my portfolio and still end up making a decent return on equity over the year. Yes, I'm not a day trader, never was a day trader, but what you can see here in this round, in this workout, I sleep very well with these positions. There is a certain economic logic behind it. Yes, I haven't done now everything you would do with if you have an analyst at the table and go into the detailed figures of NVIDIA. It's a shorter term trade. And let's assume we go through this level I've just established as where I take my profit. Now I've made a lot of profit there. Then I do the reassessment again. Ooh, is NVIDIA eventually now really a short? Yeah, because that's when all the chart technicians start looking at it. And if that is the case, then I don't go far out of the money again. Then I shift it up again. Then I go at the money and say, okay, we're now trading at 250. Technical situation looks crap. People hate it. The crash, economic crash has happened. Yeah, we're now in a recession. We already see more to that later. The 2 versus 10s getting steeper again. Always the telltale signs that, well, the nightmare is just shortly before. Then I have made a decent amount of money. This I would put then again through options in a short position, which can't take my profit away anymore. So even a crappy trade, as 95% of the viewers apparently perceive that, can turn out to be something very, very nice. And it allows me to play this odd lot opinion, which I, without any doubt, have at that moment, to slip this into the market. So I hope this brief explanation, even if it's getting complicated at one point in time, gives people an idea that not I'm an idiot, but that there's a certain logic behind what I'm doing. Nick, if I would stand in front of you as a junior trader and say, dear boss, can I put on a trade like this? Would you now agree, or would you say still must do better?
Well, I think that explanation was missing, but I think it's quite logical what you do. But it's also important to understand process. So that was fascinating. I think a lot of people are going to get a lot out of understanding how to make money out of simple little views like this, where you take a small bet at the beginning and then you can leverage that when there's some money in the trade. But it's important to talk about process as well. So I mean, you didn't give me the heads up saying I want to talk about NVIDIA. So it was on the hop, and I turned my eyes to my chart on the right here and said, put up NVIDIA and said, it's just not an obvious short, right? But here's the thought process as well from fund manager thinker. So what's NVIDIA? It's tech. So the thing about tech is that it will perform in a macro environment where rates are coming down. So my macro thought process is, rates are likely to come down. That's going to be more supportive of tech. So effectively, when you short something in tech, you've got the headwind of it's probably one of the few sectors in the S&P that's probably going to do well. And if you came into my room and said, look, I want to sell some stuff, and I'd say, go and sell something where there's no headwind. And, there is and for guys like us, where we don't have that institutional research surrounding us and 10 guys sort of giving us their in-depth opinions on either individual stocks or sectors. So we got to kind of make do from what's available on our desktop. And what I think a lot of people can get fairly easy are these relative rotation graphs. And you've seen them, you know what they are. One of the guys, actually, one of your former students had a LinkedIn with an RRG chart. And what that gives you is that sort of fairly quickly, you've got the sectors of the S&P, and you know which sectors are, if you like, heading into the, going to have a problem zone.
Can I ask you a question at that point? Because I totally agree with you with your assessment about interest rates going down, then you shouldn't be short tech. In my weird, twisted mind, I agree that interest rates are going down, but I think they're going down for the wrong reason. So the question is, in which quarter are we? You're talking about reflation. You're talking about, okay, we don't see a hard landing in the economy. We see earnings still keeping up again or improving again, and interest rates will go down. I'm absolutely with you. You would be an idiot if you're short tech at this point. We had this discussion last week. I'm more of the Twitterati who thinks the end is nigh. You're not. So in my assessment, I have interest rates coming down for the wrong reason, because we are seeing recession. If I put that together with the 10 versus 2, steepening of the yield curve we are seeing right now, economy coming down, the statistics, which I love, obviously, did show us the moment the Fed starts reducing rates into a recession, the stock market debacle only starts. It hasn't finished yet. What do you say about that?
Well, I would still say pick your sector. So even if you think that a recession is around the corner, then still pick your sector. And you've already got, you're looking to put on a trade today and not in some weeks' time. And as I say, very simply and very easily on these RRG charts, you can simply say, okay, which sectors currently have momentum looking to basically say that these sectors are going to be an underperforming sector. And then you drill down into that sector and say, okay, which individual stocks are looking to be the worst within the worst sector. And then your trade logic still works, how you would put on the trade and the whole thought process about that and the execution and so on. But you might have a bigger bang to your buck by being short the right thing. And in my sort of time, when people look to sell equity risk, they tend to simply focus on, well, then I go and sell the S&P, or I go and sell this index or that index. And what they miss is that sort of within that index, there's, for the S&P, there's 500 stocks, there's, 11 sectors, and there's a lot more of a story going on, where actually the trade is not to sell just S&P, but rather sell the sector that's underperforming or the group of stocks that are going to be underperforming. And that's the kind of thought process that, the first thing is, well, if rates are still supportive of tech, headwinds, right? Chart headwinds, go find me a stock in the right sector, which is actually looking already now, and maybe you'll make it even more money. And it's also a chance to say, how do we help people maximize, returns? Because, it's easier to go for something which is sort of working already in your favor, rather than waiting for that bit which actually said, okay, I'm waiting for the recession, or I'm waiting for this you need something which is already kind of going your way.
I agree with you. This approach is, I've done a couple of trades against better advice. You mentioned Murat a second ago with the sector rotation model, and the momentum in specific sectors always worked. Whenever I thought I'm smarter than the market was trying to, well, sell the top or buy the low, it didn't work out. The process is a different one. You're coming from an angle where you actually actively reduce volatility in your portfolio. You do the right thing with your background as a portfolio manager, where I'm more stock picker here on the way. The combination of the toolkit I have available and your approach is actually the proper approach in this whole scenario, taking volatility out, going into the individual sectors, and then you can occasionally, when I'm standing in front of you with, may I have some more porridge, still allow me the odd trade out.
Indeed, but that was an interesting thought process as to how you thought about something, and the other side of that. I mean, to sort of support your logic, so I also put up an Elliott wave chart. It's possible we're close to, a completed wave, so therefore you may have, amazingly picked the top. That's always a difficult thing to do, and there is some negative divergence in RSIs and stuff, so it may well run in your favor, but it still doesn't take away the kind of thought process on following process, and keeps people disciplined rather than Well,
let's put it that way. Now that we've started this podcast series with weekly talks, one of us is going to eat humble pie in 3 months. I hope it's you. I really do.
Well, then drinks on you if it is.
Of course, they will be. No, but that actually gives us a nice segue into the whole economy we're in at the moment. And one of the conversations that popped up during the week for me was Dr. Copper. Nick, maybe you can explain to our younger students or people who are not well versed in the economic relationship, what's the importance of copper in the market?
Well, it's the industrial commodity that basically is if you like the temperature gauge of what's going on with industry, with the economy. And you're right, where you're leading to is, well, copper is actually struggling for a while, and this week took a particular nosedive with oil and a bunch of other commodities, and I think that it's still part of the game and the thought process of how the market is split between. There's the half that seriously believe that China's not growing strong enough. It's true. The US, the Fed are going to screw things up and effectively, engineer a recession that they're going to be reacting very late to kind of avoid. So that's that half of the community versus the other half of the community, which still says, well, I think we should be able to get out of this thing. And I didn't look at the copper chart, but I looked at oil this week. And I have to say, I mean, oil is frustratingly, negative. But again, what is driving oil right now? I mean, so on the one side, the macro thing is OPEC say, we're going to restrict supply, and that's going to be supportive of prices. Yeah. But on the other side, of course, Russia have a war to fight, and war costs money. So they have to sell as much oil as they can. So, whatever rally you've seen in oil, my guess is that, it's these guys who have been keeping the lid on an oil rally. But the macro fundamentals for oil still seem good. So you've got, if the economy is awful, like copper, it's going to continue to go down. But if the economy does stabilize, then, all of these things will slowly recover. Copper is not something I've looked into, I must say, very deeply. So there may well be other reasons why copper is going to struggle on the upside. I mean, the real estate problems in China, where they've used a lot of raw material to to build all of these buildings, they're ripping them down right now. So they've got some supply, if you like, of stuff which they can sort of take out of these, the rubble, if you like, and still use. I honestly, copper is something a little bit more difficult right now, because the other part of the Chinese growth story is, we're not necessarily expecting a big industrial expansion in China, but rather, they're trying to engineer sort of consumer buying. And that's also.
I've watched a terrible video yesterday, how they were blowing up these empty ghost towns in China, actually. Skyscrapers built only 5 years ago, or not even finished properly, are now being blown up and torn down. But the copper thing, actually, I'm not observing the copper chart with eagle eyes, but I think it's always interesting as a leading indicator. Where might the economy head to? And there's a very high correlation between the S&P and copper. And at the moment, we see this divergence. Copper is pointing down, and the S&P is actually pretty much stable in there. And that's one of the flags. Don't call it a red flag, an orange flag, where I think, okay, either copper recovers, and you're right, that we are in a scenario which is not as doomed as I think it is, or something is going to happen. This would be the perfect scenario to set up a spread trade, when you just think, okay, it will narrow. I'm actually not interested in which direction, to the downside, to the upside, but this spread should narrow in there. Now, you mentioned oil. Are you interested in one of my weird and wonderful, I don't want to call it conspiracy theories, but these are the things. I do a lot of ironing. Why do I do a lot of ironing? First of all, nobody else is doing it, so I have to do it. But it gives me the opportunity to listen to a lot of podcasts and ideas people are putting out. And it gives me thinking time, because you're not distracted by anything else out there. You're just thinking. And I thought, okay, again, with my market maker hat on, why on earth is oil being sold like shit? There is the Strategic Petroleum Reserve, which should be built up. Apparently, they are still selling out of the strategic or providing out of the Strategic Petroleum Reserve. So fine, does that make any sense? I can't make an assessment here. However, what I can think is in terms of markets. There's a big market which used to be the oil market. Everybody was, the suppliers, filtering products in there, and the purchasers who needed it to run their economies bought it there. At the moment, we have two markets. We have a gray market, where Russia is filtering their huge supplies into this market, and we have an official market. The official market has always been controlled by the oil-producing countries, at least since the 70s. So why is the market coming down? Because this gray market out there, I have the impression, is almost as big as the official market we have there. The official market can't be controlled anymore. So let's assume, hopefully, that the war in the Ukraine will come to an end soon. In my scenario, obviously, the oil market will know it before we know it. What's the consequences of that? Everybody knows once the war is over, all the restrictions over a time period of, say, 12 to 18 months will also get out of the way, because they don't make any sense for the world economy. What you will see then is not a further decline in the oil price, because suddenly there's a supply in the market again. The supply in the gray market will be drained out of it again and being filtered back into the real market, the controlled market. As the controlled market is now again the sole seller of this product, they are interested in increasing prices again. So we might have the odd scenario: war stops, everybody says, oh, that's fantastic. We have a bigger oil supply. Oil prices don't see a chance in hell of going up any further. Most crowded trade anyway. Everybody was positive for energy. And then you'll see exactly that. The controlled market is in possession of all the oil supplies that come in again. And you will see increase in the oil price, even though now the world is a peacefuler place again. Totally crap, I'm thinking, or does that make a bit of sense, Nick?
Plausible. And at the end of the day, all of these markets, the two things will drive oil. And that is, firstly, the fact that there's still very little production being, there's no money being put into production. And so the long-term supply is, it's really in doubt. and that's fine if you've got a plan to substitute energy supply until the oil or other energy sources come on stream, and all of these sort of net zero targets at the end of the day, they're so ambitious, and there's very little plan other than the hope that the technology will allow to meet these targets. And if it's unrealistic, then you need some oil, and you need some fossil fuels, and I think it's there is at the moment a lot of there's the war thing, there's the Russians who need to raise a hell of a lot of money to finance their war. There's a reason for a lid being kept on the price of oil today. But looking ahead and looking what the consequences are of these sort of net zero targets, and a world which is, let's just say, out of the recession thought process, when things get back to normal, I cannot see. And for everybody who's told me it's possible because technology will find a way, I'd say, well, what if it doesn't? Then oil is cheap at $100 a barrel.
That is one of the points I've observed, and I actually made some money out of that, because when this whole shenanigans started with gas prices exploding, oil prices explode at the beginning of the war, when we went to the petrol station, I knew there was actually daylight robbery was happening there. Now we are trading below the level before the war, but the petrol prices are still excessively high at every petrol station. It's a typical scenario. I just made a new contract for gas prices, and they're bloody ripping my face off, even if gas prices are below this level again. Why did that happen? Being a German, I knew if we have been ordered to do something, that's what we bloody do. And the consumption went actually down. I caught myself putting down the thermostat in my office to use less gas. And if I do it, pretty much everybody in Germany did it. Germany, at this point in time, still of the world's largest economies, was a leader. So the demand for these products went down, which explains a lot what happened now in this scenario. Breitbart once said, politics is downstream from culture. And I thought that was an actually very astute observation. At the moment, the culture is, oh yeah, we want to go zero carbon neutral worldwide. And even though I'm trying to stay out of the political conversation, if I just put my thinking economist hat on, what's going to happen? And that will actually also be the segue for reserve currencies, which we also want to discuss and come into the Bitcoin scenario in there. The European Union can only function as long as Germany, the Netherlands, and who else is net payers? I've forgotten the third one. As long as we are still making money in this whole political project we have there. This political project at the moment is going completely into, we want to be carbon neutral by, what's the year, 2050? Which, sorry, I don't see this going to happen. If it happens, it will destruct a huge economic base we have. We see it already in Germany. All the companies, they are pretending left and then going right. They leave our country. They're going to China. They're going to all other places because the energy costs have become so prohibitively expensive that you can't compete anymore. Once this basin is lost, we are not in the situation anymore where we can fund the European Union. What's the currency of the European Union? The euro. And that was one of the things also while ironing went through our mind, because the conversation about will the dollar still be the reserve currency of the future, which has implications also for all the cryptocurrencies. A lot of people say, oh yeah, it's dangerous, and the Chinese and the Russians, they're doing this, that, and the other, and America is dead. I've asked ChatGPT to quickly give me a brief about what used to be the reserve currencies in the past, and I clicked that up, and obviously I don't want to read stuff to you, but the interesting thing was from the 1500s. That's what interested me. That's when world trade took place. Spanish real from 1500 to 1640. The Portuguese real, pretty much a reserve currency at the same time, 1500 to 1640. Dutch guilders, then from 1600 to 1720. French livre, they squeezed in there as well, from 1660 till 1795. Then the pound sterling, the elephant in the room, 1820 till 1945. Well, and since 1945, we have the United States with 85% of all transactions still being made in dollar. Yes, we have the Deutsche Mark in there, and we have the Swissies in there, but the big statistical point is roughly 150 years you have for big reserve currency for a big country. Because I always get this conversation, oh yeah, but there is real merit to it. You have the huge Chinese there. And I thought, what makes actually reserve currency? Is it the power of a nation, or is it that people think I can buy shit with their currency in a liberal, free society? And I think that is even more important. People like the pound sterling because it was the most free country, like the United States at the time. You could own pound sterling and you could make trades and deals under the rule of law and could rely on that. That is what the United States provided before they started taking US Treasuries away from Russians because they didn't do what they wanted to do. That is a big concern, I admit that. Yeah? But that is for me the only point where they could jeopardize these positions. If we have the scenario that the dollar is still going to be the reserve currency for a long, long time to come, and now what probably everybody waited for, Nick, your expertise on what do I do with cryptocurrencies? I Googled again. We have about 190 real currencies in the world, some more real than others, but 190. Shitcoins, 22,000.
Wonderful. Again, so look, you said a lot there. So
I tend to,
and it was about sort of the German economy and where is German industry going, and Germany is actually the heart of Europe. So let's think about the currency of Europe, and all of those things are truly valid. I mean, the job of any government is to make sure that there's enough energy for your industry, B, enough food for your people, and they don't score too highly in this, and for that reason, as you say, there are a number of companies that have made it clear that if they want to grow, they will grow outside of Germany, and I think a lot of people are kind of pissed off with the the general energy policy. Because whilst it's all very good for cleaner world and all of this stuff, it's being rolled out much faster than what they seem to be allowing support for industry to continue with existing energy sources, and there's a lot of pressure on banks in particular not to finance oil and coal and all of this stuff. And when you think that banks stopped financing oil and gas probably 4 or 5 years ago, now when they really need it, you can't just say, well, can you rustle me up a couple of rigs out there, please? I mean, it just doesn't work.
It's not happening.
So they've had this lack of connectivity between energy policies and what the ultimate goals are, and I think that's kind of caused a big kerfuffle. And when you talk about, I don't even know if that word exists.
I love kerfuffle.
And so
kerfuffle is fantastic. It's like, sorry to interrupt you in your thought, but have you heard about the other word I love? It's a quarteng. A quarteng.
Oh, right. Okay.
Is actually the shortest possible time you can claim that you've done a job, even if you've only done it. Oh yeah, I was just head of sales for a quarteng. Sorry.
Yeah, so you talked about therefore reserve currency, and when you look around, with the Europeans kind of in a bit of a tiz, with the Chinese having their own problems on growth, you kind of say, well, so where do I go? I mean, even if I don't like what I see, what are my alternatives today? And sometimes, that is also part of the thought process about, what currencies you might be using, what choices you have. Well, where else shall I go? Shall I go to Europe where, they haven't got enough energy? Where shall I go? And that that makes a lot of sense in that sort of debate. But then you said, okay, well, you agree that perhaps it was unwise to, sort of freeze the assets of the Russians. After all, that's rule of law. And when you break rule of law, you become an emerging market. Now, in the old days, we used to say, well, what's the point of investing in an emerging market? Because we don't trust the leaders.
Yeah.
Therefore, we are willing to sacrifice X% of our return so that we go somewhere where we trust the rule of law. Well, that's okay. And then, fool me once and fool me twice, debate.
Yeah.
So they showed the colors. Actually, initially, they showed an intent on what to do with bad actors when the Canadian truckers blocked one of the major roads.
Yeah.
That froze their assets. They were unable to sort of act. Then coincidentally, a couple of weeks later, they froze the Russian assets. So obviously, it's in the mind of people who own, let's just say, US Treasuries to say, well, actually, there's, we have to have some concern here.
Yeah.
And probably rightly so. And therefore, but this is not a new thought process. I think they've always had this fear, but I think it's been accelerated, because it was actually quite a surprise.
I didn't expect that. I think even the Russians didn't expect that.
The Russians didn't expect it, and they're pretty clued up on stuff like that. And if they'd expected, they'd have chucked their money out before they'd thrown the first tank in. So it came as a surprise, and I think therefore a number of countries who are probably looking at their situation saying, well, look, it could well be at one stage that, let's just say the West, Americans or Europeans or whatever, might consider us bad actors, or at least, they want to negotiate, and they've got this thing over us all the time that they can do. So when we sort of reserve, so you talked about sort of, the reserve currency, but when we reserve our money, our assets, we should reconsider where the reserves should be or what the reserves should be.
Perfect. I structured this interview fantastic because that is the question I wanted to ask you. Is that an explanation for the renaissance of cryptos and gold we see at the moment?
Well, that's the thing, because if you look at the BRICS countries, so the Brazil, China and India and so on, they've all made a very clear statement already for years that they're going to sort of deepen their, sort of working relationships together. And then that has been recently renewed. And what you've seen across the news reports is, sort of, I think it was India and Russia and India and another country and China and Russia and China and Brazil and all of these countries.
France was in there as well. The usual suspects. France. Didn't Macron do a deal with the Chinese?
He did with China. Yeah. In energy in Chinese currency. So.
Everybody who's a bit older and read history books remembers that the French were responsible for blowing up the gold standard in the United States.
Right. Well, so if actually they sent a ship, didn't they, to check on their gold, if I remember. And so this reserve. So even though there's an intent and there's clearly a lot of transactions taking place now in non-dollar currency for energy, commodities, and all of this stuff, it's probably not enough to really take a dent at that. You said 85% of the transactions in dollars. Maybe they get that number down, but it won't go down to kill the dollar, right? As a transaction currency. However, and you said it, well, let's think about it. There's been a lot of central bank buying recently of gold, and that's true. It's not a huge amount, but it's been certainly a noticeable amount. Turks are doing it, Chinese are doing it, Russians have been doing it. A number of people have been using their own gold to buy actual energy as well. So that's the other transaction currency of choice. So there's all of this dynamic being played. But coming back to if I'm a country that creates wealth, what do I do with my wealth? in the good old days when, it was hands across the ocean, everybody is globalized and working together, they just say, okay, don't worry about it, chaps. We'll buy your treasuries, you buy our goods.
Yep.
And that's what sits in the box that will provide the sort of future generations of China and whoever else sort of value.
Yeah.
Well, that changes now. That really does change, because now they are doing less and less. So the amount of treasuries that they've held, I think, is down 300 billion. In the last, I don't know, I don't want to say a number, it's bound to be wrong. But they're clearly showing an intent no longer to finance their potentially their enemy, and somebody who might just sort of the day two just freeze their 800 billion of treasuries, and so they have to find an alternative source. And so the Saudis, who produce a lot of oil, the Russians, the Chinese, what do they do with their cash? And so they have to find other sources and other pockets to put their investments in. And that's where sort of gold potentially fills that void. But also, you have to think about what else can, because there's only so much gold you can buy when suddenly you are just sort of full with gold. So somehow this money has to find also other homes, for their investment. So that's why to date they don't use crypto, and that's part of the thing you wanted to talk about. But I go just that one step further with the freezing of the Russian assets, and sort of this join the dots with the Canadian truckers' Russian assets. And there is a discussion today, as we spoke about last week, about debt default. And the president and the House Speaker, they're sitting in the room and they're chatting away, and dear old Trump as well has come into the debate, because he's also said, the Republicans should force a default.
Yeah, I heard that as well. He said, I believe that the Democrats will cave. And I thought, sometimes 5 minutes to 12 is usually where they stop. But when you ever work with lawyers in our industry, sometimes 5 minutes past 12, things still work. Right? Sometimes you have to show the blood out there to get the head right. So a technical default where actually nobody's losing money, but would put the screws in, is a real possibility here, I think, at the moment.
Absolutely. But this is also a very important thing, because, we spoke about rule of law, we spoke about all of this stuff. Yeah. And if you're suddenly moving the goalposts about what the rule of law is, and, again, we're into this trusting world, this world where we trust, and that's why crypto, you don't have to trust anybody. So in a world where we trust, this is, Trump was, in my view, he misspoke in my view. This is not sort of a sensible approach. They don't need austerity. I mean, we're a couple of non-Americans talking about America, but frankly, this is really important, because I think, he is wrong. It doesn't require austerity. It requires sensible spending. They need to be investing in the right stuff and not just purely consistently social programs, because social programs, they might be all very nice for the people, but at the end of the day, they do not repay debts. And for the people who are buying the debt, they're saying, well, when do I get my money back? I mean, getting their money back, nobody really gets the money back. They just get refinanced, and that's how they deal with the debt. But it's very important, because now they sort of again move the goalposts. And even though it is a conversation between perhaps the House Speaker and the president in the room, what they seem to be missing is that there's $50 trillion of investments from foreigners in America. Yeah. And they're all looking over saying, what are you doing? Because my 50 trillion coming from everywhere is being valued on the basis of the risk-free market, which you're now going to sort of, dislodge. It's going to go haywire. Therefore, what is the value of everything that I own now?
Is there a route for an actionable trade, at least a tactical trade, to actually sell into dollar strength?
you know, if I don't know, personally, I think if you do this, if they do this, and if they do screw up, and you can see from the wording of Janet Yellen says, well, if there's any default for any sort of unreasonable length of time, and all of this stuff, you kind of get a thing. They're already in that boat of defaulting, and they're probably going to, you know, it's going to be a couple of weeks, and then it will be resolved. And they kind of hope that the 50 trillion is going to be sitting there watching and saying, oh, I hope you sort it out, guys. You know, we'll just wait here and carry on, you know, doing our stuff, and just let us know when you're going to pay.
That's not going to happen.
That ain't going to happen. Exactly. So if I was advising, you know, these guys, I'd be saying, you know, you also have to think about your 50 trillion and find another home for it.
Yeah. Yeah.
And the likelihood that MSCI World Index in the future stays at 65% America and another 5% of Canada, you know, the world is going to look totally different after this fiasco. You know, the volume of investments in America, in my view, will drop sharply, and people won't be having, you know, the 65 and 70%. They'll still be in there. As you rightly said, they've got the best companies in the world. They've got the best environment if you're an entrepreneur in America, in theory. They do a lot of great stuff, but they have also a responsibility to the outside world, especially when they're financing their deficits, which, as we spoke last week, are on an ever-increasing path.
So you've heard that expression as well. The US dollar will still be the cleanest shirt in the dirt hamper, right? Against all other currencies.
Yeah, but you have to think about where you put your money if you're a central bank.
Exactly. What's outside the hamper? Yeah. What's the alternative then? Is that what already gold indicates at the moment? I'm just looking at the price action we see. Every time we try to dip below the 2000, there seem to be buyers coming in to gather up what we are seeing here. Crypto is getting stronger as well. Is that the alternative? Is that the next trade where you could say, fine, let's have a closer look into that, especially if the dollar devalues? It doesn't devalue against, like, I don't know, the Nigerian thingamy. Yeah, it will devalue against something which has value, gold. That would explain a huge spike in gold. Dollar, nightmare.
So the gold thing we spoke about also last week, where I talked about, look, if you look at where real rates are,
yeah,
and where gold is, gold should be $1,100. It shouldn't be 2,000. Yeah. So the fact that it's not at $1,100 means that over time there is really just people have been, you know, buying and buying and buying. You know, whether we see small retracements will be bought. And, you know, this, as I say, these fiascos, these discussions and this sort of anti-globalization talk and all of this stuff has made people rethink about sort of what to have in the box for the country. And I think the answer will be probably more gold will be in the box of these countries, and probably more crypto will be in the pockets of, you know, the likes of you know, normal folk, as it were.
Let's make that the last point of our conversation, because I want to keep it at 1 hour. Otherwise, people will switch it off if it goes too long. Crypto, what's your take? Because that is what everybody of my younger traders are interested in. Crypto, they only have good experience with that. None of them really got burned. There were early adopters. How do they call them? Hodlers, who hold through the down moves. Where are we in this scenario? I mentioned earlier, 22,000 cryptocurrencies. Obviously, everybody is hoping. That's when I knew that Bitcoin was at a high. One of my students called me, a man who became very wealthy through cryptos at one point, and I never invested into anything. He said, Thorsten, there's a new crypto coming out. We assume it's 80,000% return possible. And I thought, I actually should put 10 grand in that. Who gives a fuck? Yeah, I'm going to be a multi-billionaire if that works out. And I stopped myself and thought, they never got you. Now they got you. Where did they get me? I didn't do it. I'm old enough to actually know my own demons at this level. So where are we at the moment now, Nick? What are you doing? Do you invest in it? Do you sell? Do you keep hold?
I'm in the hodl camp. So for all the reasons that we talked about, what do you put in the box?
Yeah.
And, you know, in terms of your wealth, in the old days, what you used to have was kind of an allocation to, you know, global stocks, if you like, well, I've long not been a fan of just sort of this MSCI balancing, and also to mix the what's in the box with gold and crypto, and so for that reason, in my view, it's important to have that sort of diverse allocation, not just geographical, but also in these types of assets. I think they belong in the portfolio. I think actually they stabilize the portfolio as well, and I think that's what you're supposed to think. But the crypto, very quickly, the Bitcoin space is, if you like, the digital gold. It will do well when there is the sort of the problematic of debasement of currencies and all of this printing world of the Fed. It will do badly. So Bitcoin will do badly, different to gold, when we're in that scenario of the world is in a recession kind of space. Yeah. So that's when it sort of deviates from gold. So that's when it will start to sort of perform badly versus gold. But these other 22,000 stuff that you talk about, it shouldn't really be on the radar of most sort of portfolio things. However, there are some really absolutely fascinating stories and possibilities of actually really re-engineering this whole financial space. The role of banks should be questioned, the role of sort of people like Facebook and so on, these intermediaries who have access to your data, who sell your data. Part of these 22,000 cryptos are not just there to sort of have a picture of a dog and, it'll all be fine, because there'll be somebody else who likes the dog more than I did. These things are actually real projects, or a lot of them are real projects. A lot of them are also sort of just pictures of dogs, right? So we have to be, if you want to sort of go into that space, you really need to do your homework. But there was a YouTube, which I saw recently. It was the 12 use cases of crypto. Anyone who's interested in looking at what role crypto is playing in society today should find that video and look into it, because it's changing things. Okay, it is a fascinating world. Music, people talk about NFTs. NFTs just a digital picture. What's the difference? I photocopy, I scan it. I've got an NFT. So it's not. It's something far bigger than that. It's this digital property rights. Imagine music. Singers who want to sell their music. Why do they need to go to, one of these sort of intermediary companies to go and earn that money? Go and sell it to your fans. And that kind of thing is taking place today. And that's something that is, the role of crypto and all of this stuff is in the real world will not go away. But crypto, you asked about Bitcoin price. It's actually not the highest. It's come down a little bit because we're in that recession fear. Yeah. And also there's a few regulatory things that are sort of spoiling it for Bitcoin. I'm cognizant of time.
No, the point is exactly, we have our, how do you call that? Our nice teaser for next week again. I think it's fascinating to talk about new spaces, especially in the finance industry, for the different applications we have, especially in the crypto sector. Maybe we can start next week after I'm getting bashed again for NVDA and I have to say another few words.
You'll be right.
With that topic, and then work our way through what actually interested us during the week. That would be fantastic. We have 1 hour and 3 minutes. Absolutely fine. We made it to the point. Thank you very much, Nick. That was brilliant. I really enjoyed our conversation. You gave me a chance to actually fight back a little bit on the NVIDIA thing. And next week, we'll have a deeper dive into this fascinating world. What businesses could be set up or could be the next. That's where we're getting into the equity space again, next 10 bagger. Yeah? What always went through my mind, I don't know, they've done so many dilutions of Amazon, but what in 2002 you could get Amazon stocks for, I don't know, 20 cents. Yeah, they were one of the survivors.
Yeah.
If you invested then, and I'm waiting for this point, yeah, even if I'm at the moment in the doomsday camp, yeah, I want to buy shit. I love that because the fantasy is in there. but we will have to see the reaction, and let's talk about that next week. Nick, thank you very much. We are doing now the after show for privileged guests, which will be just Nick and I. And thank you for your attendance. I hope you enjoyed that. And my daughter told me, who is in charge for all the, how do you call it, social media stuff, ask people to like you, to subscribe and share this video if you liked it. You would do us a great favor, because we like to be watched by more people, obviously. And if you do that, I'm saying thank you very much and see you next week. Bye-bye.
See you. Bye-bye.